What's up everyone, it's Scotty with Money Investing, and the markets here once again just trading sideways, and the NASDAQ, the S&P, and the Dow were all red on the day, but after hours we did see some momentum on the back of Apple earnings, which came out and once again better than expected numbers, however still declines on a year-over-year basis. I'll talk about Apple in a more separate, more dedicated video. As always, if you enjoyed this market update, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below if you're interested in joining us. The first week of the month is the best time to join, and you'll get access to all the buy and sell alerts, options alerts, trade ideas, not to mention the private live streams 3 days a week, Monday, Wednesday, Friday, and of course the private videos as well. So the link's going to be down below if you're interested in joining. So this right here, Apple reports better than expected quarter driven by iPhone sales. So we did see some beats coming in because the expectations were already so low, and we did see a lot of downward revisions for Apple. And that's true for a lot of tech companies. A lot of companies have had downward revisions in the months leading up to their earnings, and as a result they beat expectations, but Apple's revenue and net income was still lower on a year-over-year basis. Again, we'll talk about that in a more separate, more detailed video when I break down Apple later today. So stocks closed lower for a fourth day on renewed bank worries, and this right here was the NASDAQ closing down 0.5%, trading now under 12K, and for the week it's down a little bit over 2%. If you come over to the S&P 500, it was down over 72 basis points, now trading under 4,100. And on the week, it is down over 2.6%. And then the Dow Jones is down a little bit over 2.85 because it's a little bit more concentrated on value and banks. It is down more, 86 basis points on the day, and down almost 1,000 points on the week. So again, we've talked about the resistance and the very critical area of the bears, which are holding us up right now. At the moment, that's exactly where we are getting rejected at the moment. So again, pulling back on the day. So Keith Upton, Managing Director at UBS Wealth Management, says that the volatility in the banking sector will help the Fed's mission of cooling down the economy. He says, and I quote, "I think it's going to take care of the Fed's job. Regional lenders are going to have to constrain capital. I don't think that money is going to be flowing through the system nearly as easily in the back half of this year, and indirectly is going to cool down the economy, which is ultimately going to do the Fed's job in bringing inflation down." And that's exactly what the Federal Reserve also wants. Maybe that's why they're downplaying the fact that this is a much bigger problem, because they want this to happen. Maybe, and that's probably evil. But Jerome Powell's also mentioned that this banking crisis is going to do part of the job in slowing down in liquidity, slowing down in money supply, and just this credit crunch and constraint is going to help bring inflation down as people start to borrow less and spend less as well. So he further goes on by saying, and I quote, "So I do not think that the Federal Reserve will have to raise rates any further the rest of the year, although tomorrow's data on the jobs reading will be important to watch." And yes, tomorrow is the big jobs numbers, right? Unemployment Friday. It's going to be giving us some insight into the April labor market, how many jobs we added, what's the average hourly earnings, what's the unemployment rate, and of course different sectors of the economy, which sectors added jobs versus where we actually declined in jobs. Tech continues to be strong, but in the South and in the West, we are starting to see significant layoffs from companies. Even Shopify announced 20% cut to its employees. We've learned from Disney, we've learned from so many other banks that are now going to be laying people off. So I have no doubt that, considering all the data points, that over the next few quarters, it's possible that unemployment rate starts to push higher. So this right here is the entire state of the market. AMD getting a nice rebound, up over 6% on the day. We had Google, Meta slightly lower, Exxon, Chevron were slightly lower. Banks were also lower for obvious reasons. And then we had industrials, materials, healthcare, all of them pulling back, with Amazon slightly up, Tesla flat, Microsoft flat, Oracle flat, Adobe was down. I'll break that down in a separate video as well. And Apple was down 1%. After hours, though, it was up close to, I think, 2% as it pushed higher after on earnings. Again, this right here is the entire market, so very, very mixed day. We did have some stocks kind of pushing higher, Equinox, Intel, AMD. Then we did have some gold companies, BUD, so Budweiser, Square, some of them pushing higher, but then overall, on a more aggregate basis, markets were lower. Moderna was also green very much on the day here. on earnings. So on the day, we had real estate and utilities pushing up and every other sector pulling back. On the week, we've got about 10 out of the 11 sectors in the red. So that's why it has been a red week for the S&P, the NASDAQ, and the Dow. In the last 1 month, we've only had healthcare, defensive, and utilities push higher. That's a very, very recessionary type playbook. If in the last 1 month, we've only had those three sectors push higher, well, that makes sense because healthcare, defensive, and utilities do really well in an economy which is contracting and entering a potential recession. That's the positioning that big money actually does because of the nature of these businesses, right? People still spend on utilities, they still spend on defensive and healthcare, even during a recession, and they pull back from cyclicals and they pull back from technology, they pull back from financial services, and that's really what's hurting sort of like different parts of the market versus benefiting the other parts of the market. So cocoa prices, orange juice, sugar, oats, palladium, all pushing higher with coffee, lean hogs, natural gas, and volatility down. Bitcoin, Ethereum just hovering sideways, 29,300 Bitcoin, and just a little bit over 1,900 is for Ethereum. Now coming over to oil, we are seeing pretty wild price actions on oil. So if you come back to the 5-minute chart, you'll notice that we did see a pretty significant sell-off here for oil all the way down to $63 a barrel and then immediately getting bought up over 9% back up to almost $70 a barrel. So we're seeing a lot of wild price swings for this, and right now we're just trading at under $69 a barrel. Mostly just consolidating sideways, and the resistance is going to be all the way up to 70, 73. Support level is going to be staying put at 65. The lower it gets, the better it is for inflation because it's going to put some downward pressure on overall prices. Coming over to Bitcoin, again, just consolidating sideways in between that range where we had the 27,000 support and we got a resistance at 30K for BTC. So this right here is going to be that level to watch. And again, another breakout past this level is going to be very, very important and exciting. It's going to put us into another rally, potentially getting up to as much as 35, 40,000 is going to be some next targets and some next levels to watch for Bitcoin as well. Going over to Ethereum, just at over 1,900 and very similar to Bitcoin. We've also got a resistance for Ethereum at 2,100, and the breakout past this level is going to be on our way to 2,300. Ethereum is potential to even get past 24, 2,500. That's going to be that next target and that next resistance in case we see a breakout past their certain levels of resistance. This right here, NASDAQ, a very similar story. We are still getting rejected at this level. This is something that we have talked about time and time again on the channel where we are hitting that resistance for the market. And same thing with the S&P 500. As you can see, resistance at 4,200. 4,200 is also a call wall, meaning there's a lot of open interest at that strike. And the next one was 4,100, but we're already starting to break down below this level. So we are getting rejected exactly where we got rejected back in February of 23, and not to mention going back as far as May of last year. So in the last 1 year, the markets really have not done anything. In the last 2 years, the markets have just traded sideways, meaning that we are at the same level as we were 2 years ago for the S&P 500, and for the NASDAQ, also we are at the same level going back as far as November of 2020. So it's been about 2.5 years, a little over 2.5 years, where the NASDAQ has just traded sideways, not done anything in terms of those returns. So that's where we are. And if we go over to the market over here, again, it's a very similar chart, but I just want to go over that again. So we're starting to see a little bit of a pullback. Again, 3 consecutive red candles in a row, starting to see a bit of a selling pressure as the bears once again start to step in and they wake up to the markets here at those levels, at that bear camp, which we have talked about. Same thing with the NASDAQ, and you can see the IXIC once again starting to see a little bit of pullback, 3 consecutive red days in a row. And again, this is the bear camp that we are struggling with at the moment for NASDAQ. So going over to Apple, on the 4-hour chart, we are seeing a little bit of momentum. So it did rally up to 169, 170, and futures are green right now. NASDAQ futures up about 0.5% on the back of Apple earnings. So again, I'll take a look at this in a separate video in a more detailed analysis here, but it does look like they beat on EPS, reported 152. So I believe it was a very, very flat quarter for the company on a year-over-year basis, and revenue came in at $94.8 billion as well. So again, beat on EPS, beat on revenue, but very, very flat-ish to a slight decline, I would say, on a year-over-year basis. But nonetheless, 177 is going to be that next resistance level to watch for Apple. And of course, that support level stays put at 157, 158. I feel like it's been a lot more than a safety trade than anything else because of investors looking for certainty in an uncertain environment. And that's been one of the reasons why Apple has done so well and is now trading at 28, 29, 30 times earnings, despite the long-term growth rate being really, really low. But that being said, 177 is going to be that resistance with a support at 158 for this stock, and we'll do an analysis on the earnings later today. Talking about Amazon. And Amazon, again, very flat on the day, very flat after hours, trading at exactly at 104. And that's where we have as a support or a resistance, depending on where we're trading. And right now, we're seeing a lot of indecision for Amazon, just really trading sideways, consolidating in that range for Amazon at the moment. So $104, $105 is going to be that support or that resistance. And of course, we got that lower high for Amazon sitting right over here, as we have gone rejected at that level time and time again. This has been the lower high and the lower low pattern for Amazon for quite some time. Talking about Tesla, and Tesla here just really consolidating sideways and not really seeing a lot of momentum. And as we have discussed before, we did see a gap down here after earnings and then a little bit more continuation on that selling pressure. And this was the fib retracement level. So the lowest, as I've mentioned, I could see Tesla come down to, at least in the near term, is going to be that 61.8% fib retracement level, and this gap that needs to be filled somewhere around 146 and 152 is going to be that support level to watch. Of course, we got a resistance all the way up to 165 to as much as 176. That right there is going to be a big resistance for us to also watch for Tesla. And once we break past that level, then we've got a potential to get back up to 190s and 200 again. But that is a more near-term resistance to watch for Tesla in the 160s and 170s. Going over to NVIDIA, and NVIDIA here definitely showing some signs of weakness, but on the back of AMD still managed to only be down 86 basis points, wasn't down as much as before, but it's definitely coming off of its resistance. If you scroll back a little bit, this is exactly where we have gone rejected for NVIDIA back in March of 22. So it's really more of a waiting game right now for NVIDIA, because a lot of things just don't line up from a valuation and technical standpoint, fundamental standpoint. So really, I mean, am I going to be a buyer of NVIDIA at 275? Probably not, but am I going to short this stock at 275? Well, that's a tough call, right? Because it's done really well in terms of sentiment. Every time it shows us the early signs and gives some confirmation that it's starting to roll over. Either earnings come out, either something happens on the macroeconomics and it gaps up and then it continues to rally, and the sentiment just takes on over again. So it is definitely been a very, very tricky trade from a short perspective, but from a long perspective also, the risk reward isn't really there. If you were thinking about the valuation and the technicals and fundamentals in a more rational sense. But if you already own NVIDIA, and this is something that I've already mentioned before, and that's a distinction that I want to make. If you already own NVIDIA from the past and you're still optimistic about the long term, you believe that it's going to be close to $1 trillion company or 1.5 in the next 5 years, 10 years, whatever your thesis is, then you can just sit back and do nothing. Sometimes the best trades are doing nothing. I mentioned this in our Discord, I think earlier this week, that sometimes the best trade is no trade. And if you are, again, holding NVIDIA from years ago or from months ago and you've done really well, you can simply sit back, you can trade options on it if you want, but buying here at these levels is a little bit more challenging. There's a very difficult case to be made for buying NVIDIA at 275, when you're starting a new position, because there's a lot more downside than there is upside, in my opinion. But again, of course, you're free to do whatever you want, but just wanted to put it out there. So AMD here, Advanced Micro Devices, also seeing some buyers push up 6%, back over $86 per share, seeing a lot of momentum back up. So as we've talked about, AMD's earnings were actually decent, not great in terms of that year-over-year number, but again, reporting decent numbers. Lisa Su, again, with the great management, is also developing some AI products that they are going to be launching very soon. And we've got the guidance, which is slowing down in the second quarter, but the back half of this year, they're expected to do a lot better, moving forward as we see comps get better, and also as we see that acceleration in PC and gaming and client services businesses once again towards the back half of 23. So $75 to $77, I think, is where my fair value is for AMD, and that's going to stay put. This is still the higher high and higher low pattern. The ascending support is going to stay put at $79, $80, and right now we're seeing a very nice move to the upside with a lot of volume as well. Talking about PayPal, and PayPal here on the day up about 0.5%. So I think after hours it was up a little bit more, pushing up over almost 1% after hours. So really just trading between that range, consolidating sideways, very, very tight range between $70 and about $77 per share for PayPal. So that's going to continue to be that level. And of course, they're reporting earnings next week. Square was up over 1.87%, so pushing higher very nicely. Support level is going to stay put roughly at $58, $59. So this right here is going to be that level to watch with a resistance all the way up to $83 to $89 per share for Square. So last but not least, we've got a couple more names. Meta first. We've got Meta coming down. So that is something that is quite interesting because it also was trading at a technical overbought level. Valuation was, I can make a case that it's not really at an appropriate valuation. In other words, it's not really trading at a fair value right now. It does trade a bit of a more expensive level than the fair value suggests, but right now it's starting to roll over, which is very normal. And this right here is actually going to turn into a resistance, and this is the gap that Meta would probably need to come down and fill in all the way down to as low as 215, 216. Those right there are going to be some support levels to watch for Meta platforms. Talking about Netflix, and Netflix really just consolidating. It's coiling into this symmetrical triangle. Every single day we just continue to trade sideways, and eventually there's going to be a much bigger move coming for Netflix as we continue to trade in this lower high and this higher low pattern. So that's something to keep in mind for Netflix moving forward. Then we going over to Google. Just really trading sideways, consolidating, down about 86 basis points, trading at just over $105. So resistance is going to stay put at 109, support at roughly around $101. So really just consolidating, sideways trading for Google for quite some time. And finally, we got Microsoft, really just consolidating sideways again. 3 red candles in a row, but still higher on the day. So red candle, but on a green day. And support level is going to stay put at 292. Resistance at 312, and we're really seeing a very, very tight range of consolidation for Microsoft once again. So you can see that really, really tight range within which it's trading at the moment. And finally, the huge winner on the day, Shopify, up over 23%. I did a video on Shopify earlier today, so make sure that you do check that out. Loved the earnings, and the future is definitely very bright for a company that has the potential to turn the corner towards profitability. So we are going to be looking into this more closely now moving forward, as they are now starting to become more profitable. The balance sheet is excellent. A few other takes were obviously the share count has been increasing substantially, and they actually need to execute well in order to turn profitable over the course of this year and going into next year. So hope you guys enjoy this video and a complete update on the markets. We are still very much in this indecision phase for the S&P, the NASDAQ, and the Dow as we continue to trade sideways in that range, consolidation. This week, though, we are lower. We are coming down on the back of earnings, and not to mention the Fed. And tomorrow, we've got Unemployment Friday. So very, very important reports coming out at 8:30 a.m. Eastern. And I'll send out some updates in our Discord as well. So hope you guys enjoyed this video, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the buy and sell alerts, options alerts, trade ideas, and all the private live streams and private videos as well. So always happy investing. I'll see you all in the next video.